In this podcast episode, Jeremy Grantham, a renowned investor with over 60 years of experience and former manager of $165 billion in assets, shares his candid views on investing, economic bubbles, artificial intelligence, societal inequality, fertility crises, and environmental toxicity. He dives deep into the current state of global markets, highlights the risks ahead, and offers practical advice for individuals navigating uncertain times. The conversation also touches on his skepticism about U.S. equities, cryptocurrency, and futuristic ventures like SpaceX, along with pressing concerns about declining fertility rates linked to environmental factors. Jeremy Grantham has gained renown for identifying bubbles, periods where speculation and euphoria cause asset prices to inflate far beyond their real value. He explains that bubbles tend to form around breakthrough ideas with transformative potential, such as railroads in the 19th century or the internet in the late 1990s. These bubbles inevitably burst, causing massive losses and economic hardship. Grantham sees the current enthusiasm around artificial intelligence as the biggest investment bubble ever, akin to or larger than the tech bubble of 2000 or the Japanese bubble in the late 1980s. He warns of a potential crash that could occur soon, bringing down the valuations of AI-related stocks by 70% or more, comparable to historic market collapses. While acknowledging AI as a revolutionary technology that will reshape the world, Grantham notes the striking lack of consensus among experts about its long-term impact. Opinions vary widely, from visions of unprecedented wealth and leisure for humanity to fears of existential risk from uncontrollable superintelligence. He emphasizes the paradox that while AI could be programmed to be benevolent, defining true benevolence universally is fraught with difficulty, and unintended consequences remain a serious threat. For example, algorithms following literal instructions may cause harm despite good intentions, illustrated by the hypothetical paperclip scenario, where an AI's single objective could inadvertently destroy the planet. Grantham calls for caution and more deliberate progress before rushing technological deployment. For average investors, Grantham advises maintaining a diversified portfolio, particularly emphasizing exposure to non-U.S. equities. He cautions against owning U.S. stocks, including the S&P 500, which he describes as severely overpriced and likely to underperform or lose value over the next 5 to 10 years. Instead, he encourages investing around 60% in broad international indexes, 5 to 10% in precious metals like gold or silver, and the remainder in bonds, and possibly some real estate. Bonds, he explains, are loans to governments or corporations, typically offering steady interest payments, presenting comparatively safer returns. However, he warns that even traditionally strong assets such as property face challenges due to unaffordability and demographic shifts, causing possible future price declines. Grantham is unequivocal in his dismissal of cryptocurrency, labeling it an unnecessary and volatile asset class that primarily serves to facilitate criminal activity and speculation rather than reliable store of value or useful medium of exchange. He predicts Bitcoin and similar cryptocurrencies will eventually go to zero, though this process could take a long time. The speculative nature and extreme price fluctuations make it unsuitable for prudent investors. A critical insight Grantham shares is that major investment firms and advisors have a structural conflict of interest that prevents them from warning clients about bubbles or recommending moving out of dangerous assets. Because their business depends on managing funds and generating fees, advising clients to exit overpriced markets risks losing clients and revenue. Consequently, investors should not expect honest cautions from large firms during bubble peaks. Grantham also recounts his own experience in the late 1990s when early warnings cost his firm substantial business as the market continued to rise before crashing. SpaceX is described as a fabulous story and one of the most emblematic examples of current market euphoria. Grantham points out that SpaceX's valuation assumes it will capture an enormous share of global GDP, with ambitions like asteroid mining that verge on fantasy. While some of SpaceX's projects, like Starlink, are profitable today, the grander promises are highly speculative and unlikely to materialize fully. He advises caution for investors with large positions in such companies, as they embody classic signs of a bubble. The discussion moves beyond markets to pressing societal challenges. Grantham highlights the extreme and growing wealth inequality in the United States, where the richest 1% control a disproportionate share of national wealth, while the bottom half holds almost none. This concentration has worsened since the 1970s and contrasts starkly with the mid-20th century's more equitable growth. Rising inequality strains social cohesion, erodes the social contract, and breeds political instability. Historically, societies with such disparities have faced crises such as civil unrest, war, or revolution. Grantham advocates for policies to increase taxation on the wealthy and enhance social safety nets, emphasizing that moderate, gradual reforms can restore balance and improve societal well-being. A significant portion of the conversation addresses the alarming decline in human fertility, especially in sperm counts, which have dropped by more than half since 1970. Grantham explains that this decline is linked to widespread exposure to endocrine-disrupting chemicals found in plastics, pesticides, cosmetics, and other consumer products. These toxins, including phthalates, BPA, PFAs, and herbicides like atrazine, interfere with hormone production, leading to reduced reproductive capacity. Microplastics have even been identified in human placentas and testicular tissue, demonstrating the pervasiveness of this pollution. He stresses that the typical advice around fertility often ignores environmental toxicity, yet reducing exposure to harmful chemicals through avoiding non-essential cosmetics and choosing organic produce can dramatically improve reproductive outcomes. Fertility declines threaten not only individual families, but also demographic stability, as population declines can disrupt economies and social systems. Grantham warns this baby bust, combined with environmental degradation, could unravel modern civilization if not addressed. Grantham encourages pregnant women in particular to avoid toxins and invest in organic foods known to carry fewer pesticides. He highlights the need for governments to regulate harmful chemicals more aggressively, contrasting U.S. regulatory laxity with stronger, though imperfect, European standards. He also underscores the importance of creating societies that support families in raising 2 or more children, as this is essential to demographic replacement and social stability. On the personal front, Grantham emphasizes practical skills like farming and engineering as potentially vital in a future marked by economic and social challenges. He advises individuals to brace for tough economic times, build reserves, diversify skills, and foster supportive communities. For those with children, he suggests considering relocating to countries with stronger social contracts and better healthcare systems, citing Denmark and Japan as preferred examples over the United States, which he criticizes for fraying community bonds and unequal healthcare outcomes, such as high maternal mortality. Underlying Grantham's analysis is a critique of modern capitalism's excessive focus on short-term financial gain at the expense of community, environmental health, and family welfare. He calls for transforming capitalism into a more family-friendly system that values social cohesion, sustainable population levels, and stewardship of natural resources. Without such systemic detoxification and reform, he warns, society risks rapid unraveling. Though candidly pessimistic about many aspects of the current moment, from overvalued markets to societal inequities and fertility crises, Grantham remains deeply engaged in philanthropy, having donated the vast majority of his wealth to environmental causes. His vision includes writing a book to raise awareness about toxicity and the social contract, aiming to replicate the impact of Rachel Carson's Silent Spring in mobilizing public action. Grantham closes with a call for individuals to rely on data, embrace realism, and take responsibility for navigating this uniquely challenging era with courage and discernment.